Hello everyone. This is the pre-market report video for today, February 27th in the Indian stock market in terms of Nifty and Bank Nifty. In this video, I like to discuss about three topics. First, quickly about what happened in US market on Friday. Then the second, there are some important defining moments this week, so we can have a quick discussion about that. Then finally, we can discuss about the technical and open interest analysis for Nifty and Bank Nifty. So let's start. On Friday, all three major index in US market opened gap down of over 1% and moved significantly down. However, in the end, it recovered some. On weekly basis, Dow Jones posted a biggest loss since September. It lost over 3%. It was also the fourth straight weekly decline and it was the longest decline in the last 10 months. Now coming to the reason, it just one, PCE inflation. Even on Friday's pre-market video, I mentioned about it as a make or break data. Since in the last 6 to 7 months, whenever there was a press conference, the Fed chairman always informed the media that he will pause or slow the interest rate hike only if the PCE inflation drops. For those who don't know, PCE inflation is the wide indicator of the average increase in prices for all the domestic personal consumption. There is a subtle difference between the consumer inflation and PCE inflation. In simple terms, consumer inflation tracks the consumers out of the pocket expenditures, whereas PCE inflation tracks the expenditures from both consumers, that including the employer contribution. I hope you guys understand. It's not just this, both of them are calculated by completely two different principles. It's very dry, so I don't want to go too deep into it. Anyway, on Friday, before the US market opening, US Department of Commerce released the PCE inflation for January month. Surprisingly, the data comes as 5.4% against expectation of 5%. It's even higher compared to December month. On December month, it was just 5.3% and in January month, it increased to 5.4%. Which means the overall inflation is not declining, it's increasing. Because of this, the CME Fed Watch tool predicted that 27% of the chance Fed will increase 50 basis points in the upcoming FOMC meeting. 2-3 weeks ago, this was around 0 probability. And also earlier, Fed Watch tool's over 50% peak interest probability was around 5 to 5.25% and now that increased to 5.25 to 5.5%. All these made the US market really very negative and thus Dow Jones dropped by 1.02% and S&P 500 closed negative of 1.05% and Nasdaq crashed 1.69%. And the same disastrous for all tech stocks. Only Facebook lost around 1%. All other tech stocks crashed around or over 2%. Then regarding oil, Reuters reported that Russia is going to cut its oil production by 25%. This increases the oil price by over 1%. On Saturday, WTI crude oil closed near $76.5 US per barrel and Brent crude oil closed near $83 US per barrel. In case of Indian areas, most of those stocks in Indian market closed very flat. Despite that, in US market, all areas closed significantly negative. HDFC Bank closed near 1% down. Infosys and Wipro closed 1.98 and 1.44% negative respectively. Only ICICI Bank was closed marginal 0.44% negative. Then regarding SGX Nifty, on Saturday morning it closed at 17,505, which means it's kind of indicating 50 points gap down opening. So this is what happened on US and global market on Friday and weekend. Anyway, now moving to the next topic. There are three important defining moments this week that we need to look out and those are India's GDP data, various European countries' inflation data and various US related economic data. First, on Tuesday, India's Ministry of Statistics will be releasing the country's FY 2023 Q3 GDP data. Again on last Friday in the aftermarket hours, Reuters released the expected GDP number which was just 4.6%. In contrast, last year in Q3 FY 2022, the economy grown at 5.4%. Now, this itself very negative for the today's Indian stock market since at present on the last budget day, our finance minister projected that India's full year growth will be around 7%. Now, if GDP comes as 4.6% means, then the India's full year growth will slip to 6 to 6.5%. Anyway, along with this, on Tuesday, other macros such as fiscal deficit and industrial growth are also scheduled to release. Then the second, Eurozone inflation data. On both Tuesday and Wednesday, Germany, France and Spain are due to release their February's inflation number. Why it's important? Again, European Central Bank's interest rate decision meeting is due in mid-March. So based on this data, they will take a call whether 50 basis point increase or 75 basis point increase kind of. Then finally, various US related macro. As we discussed earlier, so far whatever US economy related macro was released showed that their economy was stronger. So it's important to keep an eye out for any new panic. Particularly Tuesday's due consumer confidence data and Wednesday's due ISM manufacturing PMI data are the very important one. As a summary, US market closed negative, even Indian areas were trashed, and based on Saturday's closing, yesterday's Nifty is indicating negative 50 points gap down opening. Is it all negative? No. During weekend, China presented the 12-point plan for ending the conflict between Russia and Ukraine. Following that, Ukraine's president mentioned that he will consider some points but not all, and also he requested the meeting with Xi Jinping. So I consider this as a start and positive. Let's see whether market is reacting to this or not. Then regarding banks, in the aftermarket hours, RBI released the bi-weekly data. Banks loan grown over 16% and deposit grown over 10%. So both those numbers were really positive. But at present, bank issue is tying up with Adani. Honestly, I don't know when the selling in Adani Group companies will stop. But at present, only Adani Ports looks kind of becoming stable. Let's see. Just for info, 30 to 35 days ago, according to Forbes real-time billionaires list, Adani's total net worth was over $135 billion US. Now that reduced to just $35 billion US. In terms of technical, on both daily chart and weekly chart, Nifty forms a long bearish candle. In daily chart, it's a 7th straight bearish candle and 6th straight negative closing. On Friday, Nifty opened a gap up of 80 points, but in the end, it closed down of 45 points compared to Thursday closing. And during the time, it broke the crucial support level 17,500, which is kind of indicating further weakness from the current levels. However, the market is in oversold territory, so if Nifty moves above 17,500, we could see a quick pullback rally. A pullback can push the Nifty towards 17,600 to 17,750. Even if it slips from the current level, the 200-day simple moving average is around 17,350. So at least that point has to resist the fall. If it breaks, then it will fall further towards 17,150 to 17,200 levels. Then in case of Bank Nifty, it forms a bearish engulfing pattern. So it's kind of indicating more weakness in Bank Nifty than Nifty. Again, fundamentally, Bank Nifty is cheaper than Nifty. At present, Bank Nifty is trading at 15.48 PE ratio, whereas Nifty is trading at 20.57 PE ratio. Then coming to moving average and technical indicator summary, for both Nifty and Bank Nifty in daily chart, it's same as last 3 trading sessions. Strong sell on everything. Regarding options open interest, for Nifty, if you see the change in open interest, there were small quantities of new put options were added between 17,000 and 17,450, whereas large quantities of new call options were added at above 17,500. 17,600 is the point where the maximum nearby new call options were added, and thus 17,600 is the immediate resistance to break. Then based on overall options open interest, 17,000 and followed by 17,200 got the maximum nearby put option open interest without significant call option open interest. So based on options, 17,200 is the immediate support to look out for. Here 17,500 and 17,600 shows there were huge short straddle. So the next point 17,700 can act as the strong resistance for this week. Then coming to Bank Nifty, based on change in open interest, small quantity of new put options were added at below 40,000 and large quantity of new call options were added at above 40,000. Then based on overall options open interest data, significant short straddle were present at 40,000. Then the maximum call option open interest is at 40,500. Thus 40,500 is the resistance to break. Then the maximum put options without call option is present at 39,500. So 39,500 is the support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.